happening? What's happening? What's happening? What's good? IG fam. Hey, first and foremost, I'd like to welcome everybody to another episode of Rap and Dough. This is your Financial Bar series, Financial Bar Sunday. Of course, y'all know if y'all a first time visitor, this is the home of money conversations. You know what I'm saying? We like to talk stocks and business on this platform. But this is your host, Don Bucks, tapping in. You know, this is a weekly thing. Every Sunday, we tapping in. Wait for a few IG people to come in here. And for people that's on YouTube, you can feel free to follow Rap and Dough at RAPPIN underscore DOUGH. You know what I'm saying? Tap in there for daily, weekly business and stock updates and whatnot. You feel me? Because speaking of conversations, like we need to, in our black community, we need to have more money conversations. You know what I'm saying? I believe reason why a lot of other cultures are ahead of us in regards to finances and business, because I think they be having these type of conversations around their dinner tables and whatnot. Like, you know what I'm saying? Like I found myself chopping with my cousin the other day, and he got his own business and whatnot. And I felt the conversation to be super productive. Like we wasn't just talking about business only, but just to be building on that vibe, like trying to move our families forward and be self-sufficient. Like I think we need to have more of those conversations. I mean, we like to talk about money, right? We like to talk about money all day long, but not in that context, you feel me? And I believe like having those types of conversations is more productive. I think we need to have more of those. But yeah, feel free, if you're gonna find some value in this, hit the like and subscribe button. Share this, tell a friend to tell a friend. But like I said, we're talking business and stocks and basically money moves that we need to be talking more about, in my humble opinion. But yeah, hit the like, subscribe button for more of this financial bars, financial literacy that we dropping every week. We got courses coming, we got ebooks coming. I'm saying we because it's me. I'm a one-man army at this point, but it's coming down the pike because I believe that we need more of this. You know what I'm saying? And I like to give a big shout out to a couple brothers that inspired me to go hard and put me up on game. That's why I feel as though I feel the need to pay it forward with this platform, because without them I wouldn't be in a position that I am right now in regards to my investments. I like to give a big shout out to my man Barney and my man Javi. You know what I'm saying? It's crazy, they both names got E at the end. Harvey, Barney, Javi. But those my mans, you feel me? And big shout out to them for putting me up on game, and I appreciate them greatly. But yeah, man, so that's my reasoning for doing a lot of things that I do. I'm trying to pay it forward because they put me up on game. Let me know that investing, as I continue to read and continue to educate myself, investing is the only way to create wealth. Period. The only way. And I've been saying this over and over again, especially if you're a new viewer. Investing is the only way to get ahead. Like, you have to out-earn inflation. You have to out-earn all this stuff. And there's no way to work your way to what you need to have in the bubbling or working for you when it comes time to retire. Like, working won't do it. So big shout out to them for putting me up on game, man. But yeah, let me give my disclaimer before I get too ahead of myself. I am not a financial advisor. I am not a fiduciary. I'm not a money manager. And I'm talking investments, but always know that investment entails risk. and I can't be held responsible for your wins or your losses if you was to take advantage of any suggestions that I put forth this evening. You dig? So, by watching this video, you are agreeing to that disclaimer, and it's unfortunate that I have to do that, but we live in a day and age that people like to sue and things of that nature. So, even though I'm not any of those things, I have been actively investing. Actively investing for 3 years, but I've been investing for about 10 years. So I've been gaining my knowledge, and the more I learn, the more I want to share it with the people. So that's basically the long of the short of it, the short of the long. But yeah, moving on. So what we got? This week, the tech sector, like I was telling y'all last week, it will continue to sell off. You know what I'm saying? Because what happened during the COVID lockdown, all these tech companies were the beneficiaries of the lockdown. People was streaming more. People was on Facebook more. People was ordering stuff on Amazon and all that more. So those companies' stocks went through the roof. Like, it was defying fundamentals and all the technicals that decide what a stock price is worth. So they were selling at prices that were beyond their fundamentals. So it was going to come a time where these things had to correct themselves, meaning come back down to what they're really worth. So that's what happened last week, and that's what happened the week that just passed. It continued to sell off. People were taking profits, as they should, because once a sector is running hot, like if you go back to previous episodes, I tell y'all when stuff is overbought or oversold, when something is overbought, which these tech companies they were overbought because it was just, everybody was buying the same stuff. Everybody was buying Tesla. Everybody was buying Facebook. So stock prices just went beyond. So even though it continued to sell off, it went up so high that it's still up 24% on a year. So if you think about 24% on your money in a year, that's like 20 times what the bank is going to give you if you had your money sitting in the bank account. This is why I tell you to put your money to work, because it's not really working in the bank account, it's working in the stock market. So right now, if you was investing in the tech industry, it was up 34%. It came down about 10% to that. Now it's still up 24% on the year. So even though it pulled back, you're still up. So this is what I'm saying about the stock market. Like, everybody, oh, the stock market done came down, it's crashing. Yeah, but you're still up. It came down, but now that presented another buying opportunity. You feel what I'm saying? So if you took your profits, now you can invest your profits into either that same company for cheaper price or another company that's cheap that came down. So this is how you build your wealth over time, because you're continually buying stuff that's cheap, taking your profits, reinvesting it, and that basically compounds your money over time. So what else we got? Oh yeah, so Apple, we all, like, I ain't gonna say we all, but a lot of us are Apple owners out here. A lot of us got all these iPhones, can't wait to get the next one. You feel me? Like, Apple got like a cult-like following. So for a lot of people that was trying to thinking about buying Apple, they did a 4-to-1 split, and when companies split, that basically makes the stock more affordable to more people, because it was $400 a share. They did 4-to-1 split. Now it's like 100 and something. So people that were thinking about buying Apple when it was 400, now you can buy 4 of what you would have paid for 1 right now, because they're about 100, and Apple is $112 right now. So Apple ain't going nowhere. It just became a $2 trillion company a couple weeks ago. So Apple ain't going nowhere. They got a new phone coming out. They got new MacBooks coming out. They got new all that coming out. I believe it's next month, if I'm not mistaken. So on top of, like, they got like a bundle in the pipeline where they're going to bundle together the iTunes with Apple Plus TV. So they got a lot of stuff in the pipeline. Apple ain't going nowhere. So right now, Apple's a dope price to cop up. So look into that. Now, I'm moving on into the term of the week, y'all. Term of the week: bulls and bears. So if you're into the stock market, if you've been following along and you've been watching CNBC and you've been reading and you've been coming across this word bulls and bears. Now, in the stock market, there's two kinds of people. There's two types of sentiments. There's bulls and there's bears. So bulls, when you consider yourself a bull, and when they say there's a bull market, that means that the sentiment, the feeling, how people feel about stuff is optimistic. That means they believe that stock prices and the market is going to go up. That's what a bull is. So if you say I'm bullish, that means you got faith in the stock market, or you got faith in one particular company. Be like, I'm bullish. Now, what a bear is, it's just the opposite. A bear is somebody that believes that something, a company or the market is going to go down. So either way you play it, you can benefit. So if you believe the stock market is going to go down or a company is going to go down, you can position yourself to profit when it goes down. And vice versa, if you believe it's going to go up, of course, you can profit when it goes up. And that's a whole nother topic. And speaking of that, that's coming out in my course that I got coming out, options course. That's another way to play the stock market. So many ways to play the stock market. It's unbelievable. So that's coming down the pike. Also, I might drop the ebook as a package deal. I might do a little combo with the little ebook. So yeah, that's coming down the pike. But yeah, there's so many ways to play the stock market. So when people say, oh, the stock market crashing, it's like, so what? So what? You can win either way. You feel me? And keep tapping in here, you're going to get all that game. So with that being said, if you didn't already, hit the like and subscribe button. Hit the thumbs up button. Share, tell a friend, tap in. And this is another Financial Bar Sunday. It's your host, Don Bucks. And I'll see y'all next week. Peace.